Let's talk about that $100 sitting in your trading account. For most people, that $100 isn't just money. It's a ticket to a get-rich-quick fantasy. The second they fund that account, their brain flips a switch. They start doing the math on how to double it by Friday, how to hit $1,000 by next month, and how soon they can walk into their boss's office and quit. I'm telling you right now, that exact dream is why they fail. Turning a small amount into a fortune isn't a race of speed. It's a test of your ability to think in decades rather than days. There is something I call the compounding mindset. It's the unwavering belief that slow, boring, and strategic growth will absolutely slaughter fast, reckless gains every single time. It isn't glamorous. It doesn't give you that jagged adrenaline rush of betting the house and watching the P&L swing like a pendulum. But it is the very foundation that built the fortunes of giants like Warren Buffett or the legendary Jesse Livermore. It's the thinking pattern that forces you to protect what you have, grow it steadily, and most importantly, never get in your own way. You see, the average trader looks at $100 and thinks it's nothing, something they can afford to lose. But the millionaire trader, they see that $100 as a seed. You don't eat the seed, you plant it, you water it, and you guard it with your life. If you're constantly digging it up every 10 minutes to see if it's growing faster, you're going to kill it. In the world of charts, that means resisting the urge to overtrade just because you're bored, or jumping into a random setup because you're chasing a thrill. That $100 account demands your respect, because how you treat the small change is a perfect mirror of how you'll treat the big money. Think about the math for a second. If you grow an account by just 5% a week, it feels like nothing at first. On $100, that's a measly $5 profit. Most traders would laugh at that, but if you keep that discipline, $100 compounds into $10,000 in less than 5 years. The problem is that most people would rather risk 50% on one trade to feel big for an afternoon. They don't see that 2 losses in a row won't just empty their account, it will destroy their spirit. This is where the winners separate themselves. They don't measure success by a single trade. They measure it by a series of disciplined actions over years. Look at Richard Dennis. Back in the early 70s, he started with about $1,600. He didn't turn that into hundreds of millions by gambling. He did it by following repeatable rules and letting time do the heavy lifting. It wasn't luck, it was disciplined patience. Even if you have less than 1% of what he started with, the principle remains the same. This mindset also changes how you feel when you lose. To most, a loss is a setback that triggers panic. To a compounding trader, a loss is just a business expense, something already calculated into the plan. If you lose 2% today but stay calm and follow your strategy, you'll make it back. But the second you let a loss push you into revenge trading, you've already lost the mental game. Trading isn't just about reading a chart, it's about managing your emotional energy. If you're chasing right now money, you're living in a state of constant anxiety. Every tick of the market feels like a life or death struggle. The compounding mindset removes that weight. It takes away the pressure to get rich today and focuses your soul on making the right move consistently. Stop looking at those social media traders flipping $500 into $5,000 in a week. That's noise. Most of them are taking massive risks and will blow up long before they reach real wealth. Focus on your own journey. If you have $100 and aim for 3 to 5% a week, focusing on 2 or 3 high-quality setups with a 1 to 2 risk-to-reward ratio, the zeros will eventually change. At $500, you're making $10 a win. At $5,000, you're making $100. The process is identical. Only the scale shifts. Starting small forces you to master risk control before the stakes are high. If you can't respect $100, you will never survive $100,000. This isn't a passive approach, though. It's active waiting. It's what I call ruthless patience. It's the ability to stand in front of the market, watch the price dance inches away from your entry, and still refuse to click the button because the setup isn't perfect. It is the conscious choice to do nothing until the odds are heavy in your favor. I remember a trader who only took 4 trades a month. He once waited 23 days without a single position. On day 24, his signal appeared. He executed perfectly, and he made more in that one move than most impatient traders made all month. He told me, "If the market is going to be here tomorrow, why should I rush today?" Our brains are wired to think activity equals productivity. In an office, you type and talk to feel useful. In trading, the most productive thing you can do is often to stare at the screen and take no action at all. It feels unnatural. Your hands itch to click. But the tortoise doesn't just beat the hare in this game. The hare blows his account while the tortoise compounds into freedom. Think of a legendary commodity trader from the 80s who only traded about 15 days out of the entire year. He described the waiting as boring as watching paint dry. But when the trade came, it was like stepping in front of a moving train with perfect timing. He didn't run after shadows. He waited for the train he knew was coming. Winning isn't making money every day. Winning is following your plan every day. If your plan says no trade, east to no, and you don't trade, you've won. The impatient trader chases pips. The patient trader preserves mental capital. Every premature entry chips away at your confidence, leading to a downward spiral. Ruthless patience is the shield that stops that spiral. Of course, you need a plan to be patient. Without clear rules, your mind will convince you that any movement is an opportunity. But when you know exactly what a perfect setup looks like, you can reject the noise with confidence. David H., a futures trader in the 90s, was told by his mentor, "If you can stand on this floor all day and make 0 trades, you're ready to be a pro." He realized the lesson wasn't about avoiding trading. It was about avoiding bad trading. This patience is tested most during a drawdown. When you're losing, the urge to get it back is a siren song. The impatient trader doubles down and burns out. The patient trader accepts the loss and waits for the quality setups to return. And let's be honest, the market doesn't care about your hopes. It's just a mirror reflecting your discipline. Most traders lose because they tie their identity to every single trade. They treat an entry like it defines who they are. But no single trade matters. What matters is the collective result of 100 trades executed with total detachment. If you lose $100 and you're an undisciplined trader, you feel the urge to revenge trade. You start seeing ghosts in the charts. But if you treat each trade like a single grain of sand on a beach, one loss means nothing. It's just a business expense, like a restaurant owner throwing away a canceled order. You don't close the restaurant, you keep serving the system. I knew a trader in 2008 who made $400,000 in 6 months shorting banks. He was brilliant until a $50,000 loss broke his emotional detachment. He started doubling down, chasing moves, and trying to make the market give back what it took. 3 months later, he was broke. He couldn't accept being wrong. The market is a living, breathing beast. It shifts, it evolves, and so must you. This is relentless adaptation. You can't be married to one strategy. You have to treat your approach like a tool. If the tool is blunt, you pick up a new one. Don't confuse consistency with stubbornness. Ego is the enemy here. Ego wants to be right. The adaptive trader only wants to be profitable. Species survive by adapting to their environment, and traders are no different. Some months you trade fast, some months you don't trade at all. You adjust without guilt or fear of missing out. Every level of growth demands a different version of you. The beginner learning risk must become the intermediate mastering emotion, who then becomes the advanced trader who reads the market's mood instinctively. It's a constant reinvention. If you can master these 4 cornerstones, discipline, patience, resilience, and adaptation, that $100 account isn't a limitation. It's your greatest asset. It's your training ground. Master the $100 and you've built the foundation for the million. The numbers will change, but the man in the mirror must stay the same. Patience isn't just the ability to wait. It's the ability to wait without destroying yourself in the process. Be the lion in the tall grass. Don't chase every antelope. Wait for the perfect target, and when it enters your range, strike with everything you've got.